Hello everyone, this is Martin. It is Saturday evening and I just finished watching the big soccer match between Canada and England. I'm a soccer fan, originally from Europe myself, so I was hoping that Canada would get through and beat England in today's Ladies World Cup quarterfinal match, and that was not the case. Canada lost 2-1, and so they're eliminated from the this amazing tournament that's being held here in Canada. So that's that. It is Saturday evening. It gives me time to obviously put together this presentation for you. We're going to look at currency pairs for the upcoming week, June the 29th to July the 3rd. And we're going to start off with the Euro USD as I normally do, and we're going to I'm going to be stressing extreme caution for all Euro pairs, and I'll tell you about that in just a second. Okay, here is the Euro USD pair. Last week I mentioned that price had been going sideways. You can see that right here, up and down between the upper trend line, the lower trend line. And as you can see, this is a triangle, consolidation triangle. So sooner or later, price would either break up to the upside. And I mentioned that we were to wait for price to break above the 114.30 right here. But what happened last week was that price did actually break down broke the consolidation triangle to the downside, is now testing previous resistance, which is now support. Previous resistance because before, when price was here, price went all the way up through resistance, went up and up and up and up, and now went down again, and this previous resistance right here becomes current support. Okay, so what we're looking for this week is either a breakout above the 112.50 area, so breakout just above here, or break below the 111.30. Breakout, and close below the 111.30. But the other idea is to not trade this at all, and I'm going to stress extreme caution or warning to not trade any euro pairs, and there's a simple reason for that. This Wednesday is a deadline for Greece to once again pay a massive debt. In this case, it's $1.5 billion, and they don't have the funds to do it. So if this is going to start, as soon as the currency markets open, it's going to cause, I believe, some volatility for the euro pairs. And obviously, I believe the Greek, the president of Greece is holding a referendum actually in about a week's time to debate and ask the question to their public. With regards to staying within the Union or staying out of the European Union. They do owe all these massive debts to the IMF, which is the International Money Fund. They just don't have the money, and who the heck knows where this is all going to lead to. And this is one of the reasons why I'm saying at this point in time, until we know a little bit better, just kind of stay away from the Euro USD. Okay, so that is my recommendation. And let's take a look at another pair, and that is going to be the British Pound USD Daily. Okay, last week I mentioned that the British Pound was the strongest currency of the bunch, and price was basically going higher and higher and higher. But last week I did say that price was going to, from this point on, was going to retrace at least down to this area. And then look for buying opportunity to the upside. In fact, price went down a lot lower to this area right here, and I have now drawn in another triangle. You can see that right here with my upper and my lower trend line, and basically price again is going sideways. So we're going to wait and look for evidence to either the upside or the downside. Price has to close above the 158.20 right here, above this area. That will give us a clue as to the next direction, whether it's and that would be going up, or price has to break below the 156.70 for price to keep going down to this major trend line I've drawn here in this pink right here. Okay, so if price breaks below here, then price will keep going down lower. The MACD is above zero. I guess I would be looking at price to either bounce back up a little higher, looking for some evidence, and then waiting for price to break higher and taking a buy trade. But again, it's a wait and see situation. Okay, so now the next currency pair is the Australian USD daily. Let's switch to that. Okay, with this pair, the Australian USD daily, basically price is in a downtrend. I mean, we started up here, price broke down through support, went up here to test resistance, and it's come back down again. Last week I mentioned when price was around here, I mentioned that a price, just wait for price to break above the 78.50. In fact, it did not break above this area. So price did bounce back down, and in fact, you could have taken a trade to the downside. Price has also broken below this trend line. You can see I've drawn in pink, and has come down quite a bit. So what we want to do is wait for price to go back up, and this is what I mean. We want wait till price goes up to about here, the 76.80 area, maybe 7,700, so 76.80 to 7,700, and then take a sell trade to the downside. And our target would be again previous swing low, which is the 7,600 area. So that is what I'm looking at for here. I believe price is going to keep going down. MACD is below zero. So just wait again for price to retrace back up, at least halfway this big, huge bearish engulfing candle. You can see that right here. So wait for price to go at least halfway up. Take a sell limit order, or just wait for bearish evidence to downside. As soon as you see another like after an up candle, a down candle, then take a sell trade. So that's what we're looking for for the Australian USD. And the next pair is the New Zealand USD pair. Let's just switch the chart there. Okay, this pair, the New Zealand US dollar, shows us that the New Zealand currency has been the weakest currency of the bunch. So if you are also trading, let's say, the British pound against the New Zealand dollar, or some of the other currencies against the New Zealand dollar, you would have done quite well. But in this case, we're looking at the New Zealand US dollar. It's a major downtrend. It's still, there's no reason to think that it's going to change anytime soon. And last week I mentioned for you to wait for price to go up a little bit higher, and then take a sell trade. In fact, it went down a lot lower. It has now gone higher, and it's retraced off this area. So what we're looking for again is for price to either go up again, once again, and take a sell trade to the downside. This area right here, which is support, has to hold. If price does break above the 69.40, then price is going to go higher. But the other thing we can do is just wait for price to break below the 68.01 area or 6800 area. Wait for price to break below there, and you're good to go for a down trade. Price, if it breaks this zone right here, most likely is going to head all the way down to the 6600 area. That is my next level of support, and that would be a target, long-term target area. Okay, so MACD is still well below zero, and we're going to go to our next pair. Okay, everyone, here we're looking at the USD Swiss franc daily. Price is has gone back up, and it is trading sideways. So what we want to do is we want to sell, rally. It actually has gone up. Here's a huge pin bar, and sellers have taken control. But price has to break below this. You see this line right here is the 21 EMA. So if price is going to continue going down, Price has to break below the 92.50 area. If it does, then price is going to go down all the way, retest a previous swing low, which is the 90.80 area. Okay, or you can just wait for price to break above the 93.70 right here. Last week I said price. Just wait for price to break. I believe it was around this area right here. Did not break. It actually bounced up, and you could have taken a trade to the upside, but now we're looking for either a breakout to the upside or breakdown to the downside again, and this is based on prices really going sideways. As most currency pairs, they're all going kind of sideways a bit. So again, wait and see situation, and don't be in too much of a hurry. Just have some patience. Okay, so let's take a look at our next pair, the USDCAD. Okay, with this pair, last week I mentioned, and this is the USCAD, mentioned that when price was around here, sellers looked like they were still in control, and I mentioned just wait for price to go back up a bit, and then sell on at a rally. That means wait for price to go up higher, and then take a sell trade. However, price went up a lot higher than I anticipated, all the way up to this major resistance zone here. Up to the 124.20 area, and prices come right back down, showing that basically we're still in a sideways position here. Once price goes up high, sellers come in, take price down. Once price comes down lower here, buyers in control. So kind of just going sideways, down, up, down, up, down. And again, you can see price right now is stuck. We're looking for direction. Price is stuck between the 21, this line right here, the 21 EMA, and this major resistance. So price either has to break below there or above here for us to find out what type of direction it's going to go in next. The MACD is above the zero, just again slightly. If you expanded this, you would see that it is above the zero, but very, very slightly. So again, you can wait from here. If this area, this 21 EMA holds and price goes up, then wait for the next candle after that for direction. I would just wait for price to break above the 124.20 to take a price to the upside, or wait for price to come down to the 121.80. If price breaks and closes below that, then take a sell trade to the downside, which then most likely will come down here to test the previous low over here. Okay, so that's what I see over there, and let's continue to our next chart. Final chart is the US Japanese yen. Okay, with this pair, the US Japanese daily, everyone, last week I mentioned that if price breaks, and we were right about here, price breaks below this area, this zone, the 22.50, then price will most likely come back down. And I did draw in some fib lines last week for you, taking the swing low here to the swing high here. And I said that if price broke below the 122.50, price would come back down to the 61.8% area, which is right around here. See this price right there, or the 121.50 area, somewhere around there. And then look for a bounce back up again. However, price did go up, like this area held. Price bounced right back up, and see with this bullish candle that closed above the 21 with the long tail and wick. If you would have taken a buy order right at the next candle here, you would have made some pretty darn good pips, and you would have made approximately 90 to 100 pips to the upside. So what I'm looking for this week is, again, price is kind of going sideways, as I mentioned right here, as are most of the major currency pairs. So wait we're looking for direction. Wait for price to break out above the 124.50 for price to go to the upside, or wait for a price to come back down to at least here, back down, and then wait for a bounce up to the upside. So price may come back down and retest this previous 21 EMA here and then go back to the upside. And you notice also this area right here, this area is the 38.2 retracement on the fib levels, which is coincides with the area 123.20, 123.25 zone. So you can wait for price to come back down, then bounce up and go higher. Take care. Happy